Welcome back, and joining us to discuss the day's market-moving news is Rob Towell from Sasfin Wealth. Thank you so much for your time, Rob. The market's
Pleasure.
quite upbeat. Could China have anything to do with it, as we saw the trade data for April with imports surprising to the upside and exports meeting expectations?
Yes, I think on both sides it was a good number and a good print. So, the Chinese haven't put a huge stimulus package in all at once this time. They've been slowly adding stimulus into the system, and you're starting to see some fruits of that coming through now. And you saw the export and import numbers both improving this morning. So, the story that, China is cheap and it can recover, it's slowly starting to do that now, which
All
is
right.
positive for South Africa.
Yes, yeah, and indeed, maybe that's also the reason for the strength that we have seen in the rand today as well. Let's go into some of the company news that came out of the JSE. SAPI coming out with second quarter results there. There was a clear softening between the first half of FY24 and the first half of FY23, but it seemed that this half year for 2024 kind of was a tale of two quarters. The share price was down 3% at some point. What did you get out of those numbers?
I think the EBITDA number was good. It was 183 million, and the market was expecting 166. So it was a good beat on that line. But it's normally a soft quarter for them anyway.
Yeah.
I think it was a really good set of numbers, actually, if you take a look at it. And I think that you're starting to see the viscose price stabilize and possibly move up, which is really positive for them. And then a lot of their costs and one-off items that they had last year, closing down some of the graphic paper businesses, won't be in the numbers in the next set of numbers. So I think overall, I think the market maybe reacted a little bit too negatively to these numbers.
Yeah.
And I think they're in a good position. I'd probably say the negative there was on their debt side, they didn't really reduce their debt. So the debt number, it's manageable. They've got good free cash flow coming through. But I think if they started to get that debt down, you'll start to see a big improvement in the share price. So I think the business is running quite well now, and they've fixed a lot of the problem parts of that business, including graphic paper. And I think it's got a good potential to carry on moving up. It'd be nice if they can cut some of that debt.
Yeah, indeed. And debt really has been one of the line items that markets have been sensitive to. Let's get to agriculture. Cal Group, formerly known as COP Agri, of course, more diversified now. They released interim results there, a flat revenue growth from the prior period. But actually, we did see an expansion in growth when you went to the bottom line, with headline earnings per share rising by more than 7%. It is trading in the green, so I'm guessing that markets maybe shrugged off the pressures.
Well, I think so. I think we'll talk about RFG as well later, and it's similar as that, volumes are under pressure. And so volumes are going down, but they're managing to get, volumes are going down and margins are actually picking up slightly. Some of the reason why margins are picking up is that they're not spending so much on diesel with load shedding coming down. So that cost is coming out of the system. And we're getting slowly better rail, etc., and logistics are working slightly better. So you're starting to see upticks in margin, even though volumes are down. But, long term, you want those volumes to go up in a business like this. And so I think a really solid set of numbers, but GDP is still weak and the consumer under pressure. We need a rate cut. So let's see if the Fed gives us a rate cut, maybe we'll follow.
Yeah, I mean, obviously following up on that RFG interim trading statement there, they expect their HEPS to grow as much as 23%. Is this business, do you think, that one that we can call resilient?
They've had a lot of problems since they listed, but yes, it is resilient. They do, low-end type of foods, canned fruits, etc. So it is a relatively defensive business, but they've got high input costs when it comes to what they put in. If they're reliant on weather and farming into their business, so there's some risk on that side. But once if they can get that under control, yes, in a relatively defensive business. But again, they've got a big international business, so they get affected by the rand. Weak rand's good for them, to sell their products, but it's not so good for them to buy extra products and feeds, etc., if they need on that side. So it's a mixed business, but you see their revenue, their earnings per share were up about 23%. And again, in RFG, their volumes were down, but margins up again. So, you really want to see the volume start to tick up and start to increase and move up. And you'll start to see it in the numbers of Pick n Pay, Shoprite, and Spar, if those volumes are weak as well. So it's the consumer that's under pressure. The businesses themselves are running quite lean and operationally quite well, but there's just no demand.
All right. Well, talking about things that are ticking up, we did see the share price of Pan-African Resources there experiencing an uptick. Of course, they produced an update on production guidance, basically upping the lower end of their previous production guidance and also saying that their guidance for cost remains the same. And if I do remember correctly, in their last results, they did talk about managing their costs really well. Was this a glittering update?
Yes, it was. I think their costs were really good. I think their all-in costs were about $1,350 an ounce, around there. If we took Goldfields, I think a week ago, they were nearly at $2,000 an ounce on their costs. So quite a big margin in difference there. So they're starting to get real good profits coming through from that gold price above $2,000 at Pan African, and keeping their production up while the gold price is high is really what you're looking for. So I think it was a good set of numbers. The share reacted well, and it's done well over the last 3 months. And I think you're going to see a really good set of numbers coming through, and possibly a special dividend. They're going to be very free cash flow flush, and maybe we get a special dividend from Pan African.
All right. Well, let us get to your stock pick for today. Rob, what are you picking?
So I still think South African stocks in general are undervalued, and I like the banking sector. Yes, there is risk, but they're very well across the whole sector. Have got very, very strong balance sheets. They're paying really good dividends of between 4 and 7%, between which bank you look at. So I picked FirstRand here. I think that you can get a 14% return from around these levels, and I think it's a defensive play. And if we have a good outcome in elections, I think you could even do better than that. So my stock pick is FirstRand. They sit in with a really strong balance sheet. They can manage their non-performing loans well, and they've got a diverse business. So, my pick is FirstRand.
All right. Well, thank you so much for your time and for your insights on what has been moving our money today, Rob. That was Robert Towell from Sasfin Wealth.